All right, hello everyone, and we are about to start the streaming session right away. So I'm Stan, I will be a host today, so I'm a trading specialist here at Exness. So I hope that you see the screen, you see my face, and we are about to get started. So just one last preparation. All right, so today we'll talk about analysis of financial markets. We will try to fit in most current trends, most recent market conditions, try to understand the market regime, and maybe build some ideas. Because trading is not just about watching charts, not just about technical analysis. You open a terminal, you just jump right away to the chart and start trading. Not that, not only that. Well, unless you're a scalper, of course. So your activity in the markets should involve the top-down analytical process. You need to go through fundamentals to identify the context and to filter out some irrelevant ideas, to understand what's going on in the markets where the capital is flowing right now, and to sink in this action. And technical analysis is the icing on the cake, which allows you to find a good entry point, which allows you to build a position or the trade with low risk and potential extended reward, because we know that trading is not just about generating profits, but it's about generating profits with relatively low risk. That's what trading is about. So in this session, I will share with you some insights from the perspective of 20 years of my experience. So I started my trading back in 2004, so which already is 20 years. And of course, I was trading different markets, CFDs, futures, Forex, stocks, pretty much every global market which you can access. So without further ado, let's go, and we are going to write to the terminal, to the Exness terminal. So with that we are all right, so I hope that you see my screen. All right, we are inside of the dashboard of Exness currently. And let me just quickly go through our features that we have before we get started. So when you're inside of the personal account, you have three tabs here. If you click on the analytics tab right at the left menu, so you have economic calendar, analyst views, and market news. Let me quickly briefly go through these features because they might be useful for you. So economic calendar basically is a calendar which contains information about most upcoming news. And this is just a list of the news which are going to be published. Well, if you like, you can use third-party calendars or Exness calendar, so it doesn't matter actually, but all news are listed here basically within this tool. So we will go through that right away in a couple of minutes. Then we have analyst news, which is the combination of different ideas formulated by third-party companies such as Trading Central. So these are guys which are analyzing the market professionally, so they are professional technical fundamental analysts, so they are bringing ideas to the table, and there are a bunch of ideas. For example, you can select from Forex, cryptos, to stocks, to indices, to commodities, many ideas which are actually tradable. Well, they are focused solely on technical analysis, of course, combining technical indicators. So if you like, you can go through this tab, and if you lack ideas, so you can find it from here. By the way, sometimes I also do that because I watch the markets and I don't see anything interesting, so I collect ideas from there. Well, basically that's what trading is about. So you don't need to be entirely on your own, so you can grab ideas from here, you can grab ideas from Twitter, from Twitch, anywhere else. So that's how you build a field of vision basically. You read these guys, that guys, but you make your own decision. That's very important. You make your own decision. You're not blindly following anyone's advice on anywhere else, on Twitter, on social networks. You're not following blindly. So you are about to make your own decision. That's a very important concept, because lately I saw some tweets on the market. Some people got invested in crypto, in meme coins, very risky. And some people made very good money out of that, but then they read some random tweet from a random guy which claimed that, okay, we got to make a generational wealth, so stick to your position, hold, never sell, And guess what? So this guy didn't sell, so and the market collapsed 90%. So now his portfolio is 90% down. So the notion here is never listen blindly to anyone else's ideas. Build your own. So that's why in this session I will try to teach you actually to build your own ideas, not just blindly following anyone's ideas. All right, so we are starting with the economic calendar in the first place. And today is the Fed's week, meaning that the Federal Reserve, which is the central bank of the United States, is going to publish the interest rate and schedule a press conference. So that's gonna take place on Wednesday. By the way, other than Fed, we also have a Bank of Japan interest rate decision, very important for those trading the yen and the yen pairs. And and also press conference of Bank of Japan. So later we will look through the forecasts. Guys, don't think that we will not go through them. All right, but nevertheless, Wednesday is a super important day. Scrolling it down, we have also on Wednesday we have petroleum status report and stocks for oil. So for those trading oil, that might be interesting and important because stockpiles for oil are forecasted to be diminished slightly. And of course, interest rate decision, which are going to be published late in the day. So for those in Asia, that's gonna be probably in the night, maybe 2-3 a.m. Malaysia time or Singapore time. In Europe, that's going to be also pretty late in the day, but not in the night. And after that, 30 minutes after that, the press conference from Jerome Powell will take place. Well, basically, press conference is what really matters because market is predicting the interest rate itself pretty accurately. So to get the idea of what interest rate is going to be like, so let's go to FedWatch tool. So you can go to cmegroup.com/market/interest rate and you can Google, by the way, CME Group FedWatch tool, and scroll it down, and here it is. Here is a probabilities of interest rate decision for March 19th. You see March 19th, here it is. So you see that 90% of traders are thinking that interest rate will not go down, so it will stay at the same level without any changes, and that will be so because the market is very accurately predicting price action without any significant deviations. But what matters actually is the press conference which follows, and that's really important, guys. I know you've seen such videos on TikTok, on YouTube, in the web, where people are posting such funny videos, like Jerome Powell comes to the meeting and said, "Good afternoon," and the market collapsed immediately. Well, that's not so far from true, because whenever Jay Powell speaks, markets are about to move. Not necessarily they collapse, no, nothing like that, but they might actually grow or they might decline. So volatility is changing actually. But currently in the markets, there are two people who influence the market very directly. So it's Donald Trump, President of the United States, and Jerome Powell, the Chief of Federal Reserve. So Donald Trump basically acts as a factor of instability because he brings tariffs, trade wars, some concerning statements that markets don't like this uncertainty because the level of fear rises. Nasdaq, S&P 500 indices are bottoming because of that, and Bitcoin is liquidating, so it's moving down. So the markets absolutely don't like this stuff. But Jerome Powell is a different story. So whenever he speaks, markets listen, and he tends to put some soothing effect on the markets. Well, let's take a look, for example, at the schedule of monetary policy decisions. So you can go to directly to federalreserve.org, which is .gov, which is the official website of the Federal Reserve. Go into monetary policy, go into meeting calendars and information. So if you prefer official websites, so you can go it here, March 18th, 19th. So you see the interest rate decision will be published, and then 2 weeks after, minutes or protocols of the decision are going to be published. So, for example, how the statement might look like. So let's take a quick look really at the press conference and the statement So the statement itself might look like that. So if you go to HTML version of that, they say recent economic indicators suggest that activity has continued to expand at a solid pace, yada yada yada. So that's basically the small version of it, but press conference is slightly elongated. So he speaks that they seek to achieve maximum employment and inflation at a rate of 2%. And also they say, for example, economic activity has continued to expand at a solid pace, so they never say anything negative. So basically I think that's a temporary, bullish effect on the market. So we can assume that on Wednesday, after the publication of the Federal Reserve and the press conference, our markets maybe I don't know, retracing a little bit. So at least this free fall of the markets, this negative sentiment might be cut off. That's the first observation. The second observation is that usually ahead of important publications such as interest rates for the US and press conference, markets are not about to make any big moves, any really big moves. Well, we've seen the move for gold today. I don't know if this move is going to be continued or not. Gold is really has real participation from other time frame buyers, but really big moves, really big volatility probably will happen after interest rate decision from the Fed. All right, let's again check the economic calendar. So I prefer basically to use tradingeconomics.com/calendar because they also have forecasts and they have consensus forecast and they have previous numbers. That's pretty convenient to see what's going on here. So Wednesday again, so what do we see here? Wednesday interest rate decision, Fed's press conference, and what I want to point out specifically is the Bank of Japan interest rate decision. So it's also scheduled for 0.5% without any changes. If we want to see the forecast, we can click here on this icon and we can open the graph of the interest rate. So we see that it had reached 0.5%. So clicking forecast here, we're getting the idea that the market is expecting that now the interest rate will stay flat, but maybe it will go up at September 30th, 1 quarter point, so 0.75%. So in September, market is expecting to raise the interest rate, but this expectation might change actually. So that might be not in September, it might be in June, for example, or I don't know. Yeah, it's June in our case, or maybe December. So let's watch this forecast after interest rate decision of Bank of Japan and press conference. Let's watch this forecast. If it changes, so that might shift the situation for the yen. All right, another look that we can put here for the markets is what's going on with bond markets, because it's important that we are watching the probabilities for the interest rates, but they are pretty much stacked for already the current period, so they are not telling much of a story. But let's take a look at what's going on the bond market specifically. So with that, we are going to see, for example, the situation for yields of government bonds of Germany, which is Eurozone, so the major economy in Eurozone. And you see that the yields had peaked to 3.15%. And basically, so if we scroll it a little bit towards the 5-year period, so we see that they are at the peak. So basically capital flows back to euro. That hasn't happened for a long time, but the last week, maybe last 2 weeks, they have been game changer for euro. And situation for example, for Japan is 2.5%, 2.6%. Also, it's peaking. It's going to another peak. With Japan, it's a different story. So it's not only going, capital not only flows to the yen, but also flows out of the yen because of carry trade operations. So it has a balanced situation. So because if yen will only attract capital, it will strengthen and strengthen and strengthen infinitely. But that's not going to happen because of carry trade operations. Even though yields of 2.6%, the interest rate is still 0.5%, meaning that the borrowing cost is still pretty low in Japan. So, and we see that regardless of such massive rise of yields of government bonds of Japan, Japanese yen is still, I think it's not growing much, so it's actually falling against the US dollar, so you can see it clearly on the chart of Exness terminal. So it's correcting. So you see that yields are growing, currency is correcting, meaning that the carry trade operations are back in play. And also the main benchmark for us is 30-year bond yields for the United States, which are treasury yields, which are called treasury yields, or yields of treasury bonds. 4.61%, they are flat, they are not going anywhere, okay? But that means that American dollar had stopped falling. So you see, guys, this line was moving down before the beginning of March, then it started to pull back. And by the way, you can clearly see that starting from 7th, I guess, or the beginning of March, the US dollar itself, it probably stopped this free fall. Well, American dollar index, you see now, is rather consolidating than moving down. So yeah, it was a massive move down, inspired by the euro, the rise of euro, but starting from March 7th, it's basically flat. It's basically flat because the capital rotation had stopped, actually. So, and that's an interesting question, whether it will continue going down or up, or whether anything will happen here. Currently, we see that American dollar has a mild support here, given that the bond market is actually, the yields of the bond market, yields of treasury bonds are actually going flat, they are not moving down, so at least it's not under such massive pressure like it was in February, for example. The situation for euro is also pretty flat, so you see that it has peaked at March 10th, which is a week ago. Now it's moving down a little bit, so after establishing 3.21% of yield, so now it's moving down back to 3.15%, so meaning that the situation is kind of flat for Euro USD, and that's what's going on. So let me watch your comments. Gold analysis, people want gold analysis. Don't worry, we'll go through gold 100%. So gold is our favorite market too, so we will go through that. All right, gold, right? So what's going on with gold? So gold is basically what? Gold is a safe haven. It's considered as a safe haven. Now the market is particularly moving capital towards safe havens. So we've seen that gold and Chinese stocks, probably they attract a lot of capital. So there are maybe two markets in the global arena other than Russian market, which is also not falling, but that's a different story. That's entirely because it's isolated market. I don't know about other isolated economies, but that's how it works. But basically, gold and Chinese stocks, they are the only assets probably that hold well during this market's turmoil. So that's why we're particularly interested in gold. Before we get started with gold, so I want to show you the website barchart.com, which indicates the commitment of traders reports, and they represent changes in the futures market for the weekly basis. So we go to the gold GC, which is GC future, and scrolling it down, so we remove unnecessary detailization here, which is disaggregated reports, we don't need them, and leave only basic report. And you see this red line. So red line basically is what? Red line is a position or net position of commercial traders. Who are commercial traders? Commercial traders are basically the big guys who go for the delivery. So they buy real gold bars because in the futures market, the gold is delivered in the form of bars. And so they kind of buy the physical gold. And you see that purchases of physical gold, futures for the physical gold, had reached minus 268,000 contracts. That's basically the recent peak. The previous one was in the beginning of January, so now we have another peak. So I think that's a kind of a bullish signal. So in spite of the gold positioning in the peak, that might be the potential bullish signal. Though, of course, technically, we see that technically it might be overbought a little bit, but I don't think it's yet overbought very massively, because it still has capacity to move higher. If you take a look at the daily chart, and if we put here Bollinger Bands indicator with a parameter of 50, which indicates the current 2 standard deviations from the average, from the 50-day moving average, basically. So you see that it's positioning right at the top of the Bollinger Bands, but if you see the previous dynamics, how it was behaving in the past, just for the reference, usually it tends to break through the range, to consolidate for a while, at the top of the range, maybe to touch it, and after that to go down. So the first touch of the Bollinger Bands is never considered as overbought market conditions. So that's exactly what we have now, and I think that, well, currently maybe in a few days period we have it probably. We have some expectation of it going up, but of course not without intraday volatility. I don't say that it will go up immediately, but I think the area between 3,040, 50, 60, 70-ish, something like that, might be visited in the near time, because actually the participation is very solid on gold, is very solid. Why am I saying that? So not just that commitment of traders are increasing, but if we go to cmegroup.com, which is the best source of information for the futures market, and if we go to daily bulletin indicates the change of an open interest for every day. So it's published in the form of PDF report, and let's scroll it down quickly to metal futures products. And what we want to see here is the GC future. GC future is gold, basically. And where it is? Here it is, total GC futures. Yesterday there was a very small day, right? Let's take a look. Yesterday there was a doji bar, basically. Here it is, March 17th. March 17th it was a doji bar, but you see that the open interest still increased for 1,222 contracts, which is 0.3%, not a big deal. But the day before, it had increased for 1.5%, which was worth 6,000, 7,000-ish. The day before, so the previous week was real accumulation. They added 20,000 contracts, 10,000 contracts within a single day. So you guys may check it out on your own. Because if you trade gold specifically, if you see such a participation, if you see the new business coming in, the new money coming in, so it will be reflected in the form of open interest in the futures. What is open interest, by the way? Open interest, unlike volume, is not just a turnover, but it's a number of contracts outstanding, so which are held overnight. And that's important, because if you're a day trader, you will never hold your position overnight because it's too demanding. So on the futures markets, for example, you have the maintenance fee, so it will be costly. If you're a day trader, you're gonna close your position, before the rollover or before the so-called clearing on the futures market. But if you hold your position overnight, that's already something. That means that you're a long-term player, that you have the capital, you have the capacity, you just build your position. You build your position for the long term. So a lot of positions have been added to gold. Is it a peak of the market? Does that mean that actually these guys are mistakenly buying longs here? I don't think so. I think that this trend is going to be probably consolidating for a while, but maybe current rally should or could reach the area between 3,040, 3,070. That will be absolutely possible, I think. Well, all right, so let's remove the daily structure and let's try to understand what might be our trading plan here. I opened some position yesterday. I closed it already, so I've put some momentum trade yesterday at the market close, when the market was coming closer, very close to this border of this formation. So I bought it here. And that was a really interesting trade. So that's a breakout trade, basically. It's already too late, I think, to play the breakout. So, but what might be your course of action? So for that, let's start with the daily chart. Daily structure. All right, so it is bullish, we know that, but let's implement a couple of indicators to better understand the market structure. Put in here double moving average with the parameters of 20 and 50. That's our dynamic reference. So what do we see here? So that's a support. And let's also build average true range indicator, which measures volatility of this market. Let's put here 20, the parameter of 20, and let's put some different color, for example, white. So what do we see here? Currently, volatility had peaked, but it's not at the peak already. So whenever we have a trend, strong trend, bullish trend, volatility tends to go down a little bit. I don't know, guys, if you see what I'm showing right now. Hopefully you see that. It's moving down. Basically, big moves in the market starts with this change in volatility. When the cycle of volatility changes from low to high. Now it changes from high to low. That does not necessarily mean that the market will stop. No, nothing like that. But I am pointing out that it was high, so now it's diminishing a little bit. So maybe maybe it might lock in some consolidation, but it might not necessarily happen today or tomorrow. All right, so market is located above the support, so just take a look at it. It's located above the support. It's really clear, right? Because it's located, I don't know how $100 or 3.5% above the moving average, the 20-day moving average, which is pretty a lot. And 100 volatility for the day is $32, meaning that it's standing above the 3 daily volatilities, meaning that the market is in an active price discovery regime. Well, it's clear without saying, right? Because it's in a price discovery regime. But what does that mean practically? It means that it's either overbought or it's actively discovering new prices. So I'm inclining to the second scenario. It's actively discovering new prices. And basically, what are you going to do in this situation? So the best course of action would be either to wait for the consolidation and to wait for the breakout of this consolidation, which might look like that. Well, that's very simple, right? You know, these continuation patterns like flags, triangles, whatever. But you need to be a little bit careful because, yeah, market may continue to go up, you know, like crazy. But you as a trader, on the contrary, want to find the position with a low risk. You don't need to take every move on the market. You don't need to earn all the money. You need only to find trades with low risk. So that might be the potential trade with a low risk. If the market gives you such an entry point, so that would be probably good, because that would be the breakout. The breakout will drive the price higher towards 3,040, 50, 60. So that might be really a trade with a low risk. Another alternative is to wait until some volatility expands a little bit, so the market establishes some trading range, and you want to capture some bearish trap here. So let me quickly show what I mean here in this case. So for that I need a drawing tool. Here it is. For example, it starts to consolidate, and then boom, it captures the liquidity, right? I don't like this word capturing the liquidity, guys, but I don't know how to describe it, how else to describe it, because it doesn't make sense capturing the liquidity. Nobody captures anything here. That's just a quick liquidation, quick retest, quick rebound, if you will. So usually that happens like that. So your course of action might be to patiently wait until it collapses to the bottom of the range, it holds, it reverses, it shows you some candlestick formation. After that, you might carefully time your entry to the upside. So I think that might be the pretty good course of action. So not at the peak, but potentially at the bottom. So how you understand that the market is at the peak or at the bottom? So that very simple indicator Bollinger Bands will help you identify it. So for example, now market is rather at the top, because you see it's located at the top of the Bollinger. It crosses the Bollinger. If you enter the position today, right now, probably you will get stopped with 80% of probability, I would say. Because why am I saying that? Because the mean reversion mechanism, market reverting back to the mean or back to the average, is actually 70-80% of probability. You never know where the peak is gonna be. It might peak and then reverse, right? So it does not mean that you have a short here. Well, nobody can prohibit you from shorting, but you never know where exactly the peak will be located. That's why it's very dangerous. That's why I'm not saying that you want to play against the trend, nothing like that. But actually, mean reversion is a very logical mechanism which happens with 70% of probability. So if you jump at the peak, so you're going against the odds. You can do that, but only in a very strong market condition, when there is a breakout, when the market is on the go, ready to move, breaking the formation. Currently, we don't have this situation. It was yesterday. Between days, it was breaking the formation. The previous formation was here, by the way. It may continue driving forward, but I don't know how far. I don't know how quickly it will continue driving forward, but that was an entry point. Market may consolidate a little bit, but your entry point after the formation is already broken, that's a different story. In this particular case, well, the entry point was here at 2,998, but not at 3,025. It might continue going up, but it's pretty risky, okay? So, two types of response here I see. So the first is wait until it consolidates, wait until it breaks out, okay? That might be flag, triangle, whatever it is. The second is the market consolidates, retests the previous low, goes higher. So carefully watch until it forms the candlestick pattern or anything like that. That will give you the entry point with a decent stop loss, small risk, and extended reward. All right, that's the way you fit into the strong trend. Because just take a look at the previous action, right? How it was moving. It was moving with the same manner. You see that the market is going up, establishing the peak, going up, establishing the peak, retracing back again, forming the range, breaking the range. You're good to go. So you can play the breakout of this range. All right. Or another story is when the market is breaking the trend line. That's another one. That's another entry. That's another potential entry. You see, when the market is establishing the downside move, then it violates the trend line, violates the lower border of the formation. That's another entry point. Relatively more risky because market can continue collapsing, but you're not supposed to jump in immediately. You can wait for the confirmation, but on a smaller time frame, like 5-minute chart, for example, even on the 1-minute chart, so you can wait until the confirmation, and that might be another entry point. The same situation might be here, so the trend is still on. Don't forget, the trend is your friend. So that doesn't make sense to fight the trend. Fighting the trend is extremely painful and will bring you a lot of discomfortable situations. So following the trend is much easier. All right, so guys, please give me some idea. What do you want to do? What are you following right now? Let me read chat a little bit here on YouTube. I know this stream is being broadcasted to Twitch and other platforms, but I only see YouTube here. So if you want to, guys, communicate a little bit, so join to our YouTube streaming. So we got people from Uganda, Africa, India, Zimbabwe, North Korea also. That's really interesting. Bangladesh. Hello, Bangladesh. I was in the city of Dhaka one day. Ghana. All right, guys. So what are you trading? So give me some instrument. We will go through that. All right, while you are thinking, so let's switch to other alternatives. So for gold, let's just sum it up a little bit. So gold is bullish, right? It's at the peak, not a perfect trade location. You need to be thorough. You need to be exact to fit into this trend. And you can do that within a day. So that might be an intraday trade until it reaches 3,040, 50, or 60. Yeah, reading comments. Really, you mean I was in Dhaka? Yeah, really, I was in Dhaka. Yes, I've made a seminar there, the trading seminar, believe it or not. And yeah, it was a long trip, but I used to be in Dhaka one day, right? Kenya, Euro Yen. All right, let's go through Euro Yen. Euro Yen. All right, so Euro Yen is basically linked to the dynamics of Japanese yen and euro, obviously, as euro is in the first place and euro, yen is in the second. So Benjamin took a brief shorts on gold. Well, be very careful with that, Benjamin, because that's a trending market and it's extremely dangerous to oppose the trending market. Gold, silver, Bitcoin. All right, so let's go to Euro Yen as we are already opening this chart. So market structure-wise, the market is located in an uptrend, right? We understand that, in an upswing. So how do we understand that? So first of all, we understand that the market is basically making picks. Then it makes 3 consecutive closes below the high. Then it reaches the new high, again. So that's good, but the market is actually range bound, so it didn't have any history of a trend, so it's staying in the base, in the long-term base, starting from maybe August 2024, which was already more than 6 months, and it's standing inside of the range and standing inside of the base. No trend behind, right? As we don't have any trend behind, so this market is probably ranging. This market is ranging, and as the market is ranging, so the best course of action that you can do is to implement Bollinger Bands indicator, and you see how it works. The market finally, when it reaches the top of the Bollinger, let's put 50 here for the better filter. So when it reaches the peak, so it sooner or later creates a pivot or the reversal. Well, it's not happening overnight, but the pivot or the reversal that happens in a maybe 3-5 days period, something like that. Market only had come to this level just today, and we are maybe in a pivoting moment, so I'm not so sure about that, but maybe in a pivoting moment. On the other hand, euro is strong, it's getting stronger. You see that the euro is getting stronger because yields of German bonds specifically skyrocket because of military spending, because of talks about potential, well, basically that's military spending and tariffs between the US and Europe. So given this picture, right, this picture makes fundamental money flowing into the euro. So I am thinking that euro yen and other euro related pairs, they're in an uptrend, so they're not going to go down anytime soon. The situation is changing fundamentally. Yen is diminishing slightly, right? But we will have the press conference from Bank of Japan on Wednesday, so we will have the idea of what governor will say so about the monetary policy. Currently, I think that maybe the market can actually continue driving higher because of fundamental money going into euro. So that's something like that. Again, there are several ways to ride this trend. The first is intraday trade, the continuation intraday trade. Another is a swing trade. The swing trade basically works like this. So you wait until market makes you the 3 consecutive days of close below the high, and the 4th day is the best timing for continuation, something like that. So if you want to go with the swing trade better will work like that. You need to wait for at least for the small correction and go after this correction to the upside. Well, execution might be different, so you might get in on a 5-minute chart and a 30-minute chart, so depending on what time frame do you prefer for your execution. And yeah, so if you are a day trader, if you want to day trade, so you can work right away, but you need to find some good pivot point within a day. How exactly do you do that? Well, on a 30-minute chart, for example, you can narrow down to 20-day Bollinger, 20-period Bollinger. Market is correcting a little bit, so it's establishing the correction, or not the correction, the consolidation, establishing the consolidation. You wait for the moment when the volatility increases, when the consolidation is broken, so you want to play the bearish trap here in this case. Well, I think that's the most common and the most simple pattern to follow in the daily price action. Something like that. You're not jumping at the peak, guys. You are waiting for the dip. You're not jumping at the peak, because otherwise it will be whipsawed. If you have a short stop and if you're jumping at the peak, no way the stop can survive. It probably will be captured. And you will, in a better case, you will close your position in a break even. Doesn't make any sense, right? Opening position, closing it to the break even, and taking a stop loss. You need to make a pivot. You need to take a pivot point. That's very common concept for day trading. You wait until the market consolidates, breaks against the trend, makes a bearish trap, reverses, makes a pivot. So that's the moment you have a low risk trade. And the good thing about that, guys, is that if you take a pivot, so the rest of the time the market will just go in your direction, and that's it, never catching your stop. And then at some moment in time you will close it. But that's very important. You got to close the position inside of the same day. That's not a swing trade. Inside of the same day, meaning that for the next day the price action might be different, may continue going down again, then up again, something like that, right? You don't want that for your day trade. You don't want your paper profit to just disappear. You don't want that. That's why if you follow the trend, you take it with the slices, slice by slice. You cut it slice by slice, okay? And that might be pretty good course. By the way, it's not a recommendation, guys, so don't think that it's a recommendation. No, you have your own strategy. Maybe you are a momentum trader. Maybe you better trade with the momentum. I don't know. So stick with your strategy, but I'm giving you some insights of what the potential entries might be. Well, that's just an example of how it actually works. Just take a look at the previous price action. March 17th, market locks in a consolidation. That's an inclined formation, inclined line, so it breaks the inclined line. So in other case it's inclined line, breaks, reverses, goes up. So of course 30-minute chart might be not very sensitive time frame for the day trade, but 5-minute chart is better here. So market tests the level, goes higher. That's the way you can jump in and build a position with relatively small risk. So that's just how it works, right? And that goes higher. But that's a beginning of the swing, right, guys? That's the beginning of the swing. Now it's already, the swing is mature, so it's going in the same direction for already several days. So whenever trend becomes mature, so you still can capture something in this direction, but it tends to lock in a consolidation. The best of you can take is to take maybe the small slice of this trend, but still it might be enough. It might be a good trade. All right. All right, so we got requests: silver, Bitcoin, gold, silver, Bitcoin. Gold, we already gone through the gold, so let's take a look at silver. Silver is also bullish, right? So maybe not so strong as gold, so it's going after the gold. That's a production metal, going after the gold. Well, also pretty strong. $32 for contract for the contract for silver. Basically, of course, the capitalization of silver is 20 times, I think, smaller than gold. And gold is more interesting because it's considered as an investment vehicle, investment asset. Major investment banks, institutions, they accumulate gold as a protection. Silver is a different story. It's a production metal. Still, it has some capacity to go forward, but you see that the price action of silver is different. So it reaches the peak, then it starts to consolidate, reaches the peak, it starts to consolidate, reaches the peak, starts to consolidate. So it's relatively difficult to find the moment of activeness on silver, unlike gold. Gold is more smooth, it can go in more substantial swings. Silver goes in the smaller moves. So it goes higher, consolidates, goes higher, consolidates. 2 to 3 days, it's done, okay? The same situation we have here. It was moving for 3 days, now it consolidates. So if you want to get in silver, so probably the rotation is the most expected scenario. Rotation, some kind of frustration, because it's not very easy instrument to trade for. day traders or short-term traders. So that's silver, guys. So I would be very careful. So I would capture silver at the support, at the dynamic support, not at the peak. So if it goes down to this area between 20 and 50-day moving averages, so that's a different story. That's the way I would try to maybe watch silver, but not at the peak, because it's very difficult to capture the momentum trade on silver at the peak. Not impossible, but pretty difficult, I would say. Pretty difficult in comparison to gold. Gold is easier, I think. So for example, yesterday I caught a pretty good momentum trade. It's easier. Silver is more difficult. Bitcoin. All right, Bitcoin is gloomy. So liquidity is drying up across the board for Bitcoin. So you see that it's not being supported, and it's just standing. Just if you put any moving average, especially 200-day moving average, which is considered as a long-term reference point, so it's standing right at the 200-day moving average. So that's a problematic point, because sometimes strong trends, they tend to reverse at such points. Or if it closes, below this point, it might continue going lower. But I think rather this is a different type of situation. Maybe that's a consolidation for a little bit. But let's take a look previously how the market was reacting at the 200-day moving average. Sometimes it just tests and skyrockets. Sometimes it tests, consolidates around this level, and then goes higher. Tests, consolidates, retraces. Okay, tests, consolidates, retraces. Now we are here. We are already near this level for already some time. So it had tested it 2 times. Now it's standing here for another 7-8 days. So I guess that in theory that would be pretty decent point for forming a long position, because if you will time the entry, if the market retraces, the retracement might be pretty substantial. So I don't think that it's super gloomy, because actually on the coin market cap, for example, if you go to the coin market cap and you take a look at the fear and greed index, you'd see that fear in greed index is constantly positioning in the fear territory. Let's take a look. It's constantly positioning in the fear territory. Usually fear territory is not a sell point. It's not a good sell point. It's rather a good buy point. It has been, last week it has been in extreme fear with a 15, now it's 25, slightly better. But whenever it falls into the extreme fear, usually that's, I would say, more of a buying opportunity than a selling opportunity. Maybe not necessarily today, but that might actually happen. Yesterday and day before yesterday, the large whale, some guy with huge amount of money, so opened a short position with a target of 68,000. But his position is fluctuating in a real time. But I don't know if that might be some informed market participant or some savvy market participant. That's very difficult to say. Currently, we see that the market is unable to cross 200-day moving average. So that's what we see by our eyes. On the other hand, it's also not moving down. The downside pressure is also pretty muted, I would say. It's not moving down substantially. And yesterday, by the way, there was a substantial move on some altcoins. For example, PancakeSwap, Toncoin, by the way, with Pavel Durov, he actually traveled back to United Arab Emirates. So if you know who this guy is, actually founder of Ton and Telegram. But some altcoins were really doing well yesterday and the day before yesterday. So I'm thinking that my educated guess is that the short pressure, the downside pressure, is actually over for Bitcoin. So it's consolidating. So maybe not immediately, but it might trigger some buying signal at some moment in time. How exactly would you spot that? So the best course of action is very simple, is actually to wait until it shows you the first day of the recovery, meaning that daily bars, there's daily bars. You watch until it consolidates, then the first bullish bar, and the second bullish bar is your bar where you can enter the position. Wait until the first bullish bar, And the second bullish bar is the day of continuation, the potential continuation. Just take a look at how it happened in the past. The same reference, the 200-day moving average. Well, let's just go back in history, okay? Here, touches the base, forms the bullish bar, continues to move the second day, right? Goes down, touches the base or consolidates below, bullish bar, then the continuation, but it was standing 7 days before that. Then the long-term consolidation here, but any time when it forms the responsive action, it tends to continue. It tends to continue, continues. Then it again corrects, makes the bullish bar, continues. Corrects, makes the bullish bar, continues. Okay, it continues. So that's exactly what you want to spot here if you want to go long. So just very simple. You don't need anything complex here, guys. You don't need anything complex. You don't need to overcomplicate your trading. Just if you want to go long, wait until the recovery bar, the first recovery bar. And if you find it, so the second day might be the day of the recovery. At least it's on my watch list right now. So if I see the recovery day, the second day would be my day of action. Of course, I don't want to just jump in blindly, so I want to find a pivot within a day with a 5-minute chart, a 30-minute chart, but that's already would be the timing, the execution part. But the analysis part might be if you want to go long below the 200-day moving average. So if you get on the trade here, so the continuation might be substantial. It might be like 2 weeks of action, with market reaching 100,000, maybe even higher. So imagine yourself catching such a trend. That might be really substantial. That might be game changer. You can make the 2 months profit or 3 months profit in one single trade, which is not a day trade, of course, but it's a swing trade. And I think that might be pretty interesting. US 30. So all right, you want to see what's going on with S&P. Well, that's Dow Jones, right? I don't know why you guys trade Dow Jones, because we have S&P 500 and Nasdaq, so which are more liquid and more volatile. But nevertheless, we got the inquiry for US 30. Let's go through that. US 30, which is Dow Jones, meaning that the weight of industrial stocks is greater here in comparison to Nasdaq, where the weight of technological stocks is greater. But anyway, so what's happening here? So it's bottoming a little bit. So let's go to CNN Fear and Greed Index. So I wanna go to first to CNN Fear and Greed Index and see how the sentiment had shifted here. So let me quickly open the CNN.com website. That's Fear and Greed Index. So it's still in extreme fear territory, which is not so bad for buying, by the way, as you already know. Scrolling it down, let's take a look at what's happening. Breadth is not very good. Breadth means that not many stocks are actually going up. Many of them are bottoming. Many of them are moving down. Strength is not also very good, so it's just positioning at the bottom. And volatility, what is notable here, volatility meaning of VIX, that's a VIX. Well, it has been peaking, now it's moving down. So it has been 27, now it's moving down, still 20, but not very high. Meaning that the level of fear for S&P 500, that's S&P 500 index, guys, but Dow Jones is also, correlating with this index. So safe haven demand is in extreme fear. So yields of bonds are they're pretty high. So I would say sentiment right now is negative. So if you want to buy it, I don't know if this trade is going to be successful, but at the same time it might be the potential bottom because on the bear market corrections are pretty fast and rapid and furious. Well, let me refer to S&P 500 more because it's